What's up everyone, it's Scotty with MoneyVest. So in this video, we are going to be talking about Tesla. I will be giving you guys an update on this company, go over my plans moving forward. I did a very similar video a few weeks ago talking about what my plan is with Tesla moving forward. We're going to talk a little bit about the technicals, and there was yet another price cut from Tesla for their FSD software and a few other inventory models that pretty much knocked down the price by about 5% on Friday. So we do have a long weekend. So trading is not going to take place on Monday. It is going to be a shorter week next week in observance of Labor Day. So make sure that you drop a like and of course subscribe to the channel on this channel, of course, and our link to our Discord and Patreon is going to be down below. The first week of the month is the best time to join, and you get access to all the buy and sell alerts, options alerts, trade ideas, all the buy and sell alerts, of course, intrinsic value spreadsheets, and all the members only private videos also included. And I also want to mention that we do have the fundamental and technical analysis courses currently 50 to 60% off, and the coupon code is going to be LABOR4 if you want to take advantage of that as well. And that will give you access to over 100 plus video lectures, over 25 to 30 plus hours worth of content, and just a lot of detailed analysis with members only PDFs and spreadsheets and whatnot. So everything's going to be included with the coupon code LABOR4, and this does expire on Monday. So going over to the Tesla price cuts. Their shares dropped over 5% on Friday after the electric car company cut prices on some models in the US and also reduced the prices for its premium driver assistance software, which again is going to be the full self-driving FSD software, and that was cut by $3,000 from $15,000 down to $12,000 if customers were to purchase it upfront rather than going through a monthly subscription where subscribers pay about $99 or about $199 per month, depending on whether they're upgrading from a standard or other premium versions as well. Not only that, Tesla also is cutting prices for inventory vehicles in the US, including its entry-level Model 3 sedan, luxury Model S sedan, and the Model X SUV. In China, Tesla is reducing the price of Model S and Model X by about 7% as well. So this continues to go on, and we just have to accept the fact that every time Tesla is going to announce price cuts, that's going to result in prices for the stock price going down. And the reason for that is very simple. Price cuts are seen as a direct correlator with margins, right? If prices are being lowered, that means lower revenues, that means lower margins for the company as well. Until we see a more stabilized margin report, of course, that's going to come out when the company starts reporting earnings. If we start to see a significant increase in margins once again, with that operating leverage, with more efficiency, as the thing is that Tesla is going to be doing a lot of volume with all these price cuts, right? If they continue to lower prices in the US and of course in Europe and China as well, you will see higher volumes. You will start to see Tesla doing record deliveries each quarter, which is great news. But at the same time, revenue is going to be not that comparable compared to last year because of course prices were much higher. The average selling price was significantly higher than what we're dealing with right now with all the price cuts that we've seen so far in 2023. However, margins can and potentially will stay intact because there is going to be a level of operating efficiency, right? Tesla making, let's say, a few 100,000 cars versus a few million cars, it's a whole different story, because the more you basically produce these cars, the more economies of scale has a chance to work its way through to from the operating processes, right? So in other words, if they're making more cars, they're more efficient over time in the entire process, and as a result, the margins can potentially stay steady. But right now, with the situation that we have, we just have to accept the fact that every time Tesla reports price cuts, there is going to be a sell-off in the price. And the FSD discount follows reports from the National Highway Traffic Safety Administration and is nearing completion of a years-long investigation into the possible safety defects of Tesla's driver assistance systems as well. Now, this right here is a covered call. I sold literally a day before this catalyst came out. So I did that on September 1st, I believe I sold on Thursday, or might have been on Wednesday, because Friday was September 1st. So 2 days ago, I think I sold this covered call on Tesla for about $325 strike, expiring in November. I mentioned this in one of my other videos as well. And the only reason for this is, and I think I did that in this video as well, why I picked that 325 strike is because we've got a very, very strong resistance at that level, right? As close to 290, 300, and as much as 320s for Tesla. And of course, this one's already up close to 33%. The moment it gets up to over 80+% profit, I will be looking to close out this covered call and we'll be taking that profit. And then once again, if the price starts to recover and rally, moving forward, then I'll be looking at selling maybe 350s, 375, or even as high as $400 strikes for Tesla covered calls. But these are, again, a great way to hedge your potential downside. You don't need to necessarily, understand or predict where the price is going to go, but instead just really focus on understanding that, okay, where am I comfortable getting rid of some of the shares that I own for this particular stock, this particular company. And if you are comfortable with that, options is very much psychological as well, right? Oftentimes we think of options as being like, oh, I shouldn't have done that, or I shouldn't have done this. Bottom line is, as long as you understand all the possible scenarios and you are okay with those scenarios, then options trading can be a lot of fun and of course generate a lot of premiums for us as well in the meantime, as we are waiting for our price targets and for our fair values to get hit. So something to consider. Obviously, we've got a whole options course as well built around generating cash flow and generating premiums by selling options. That's a wheel strategy that we also run on our accounts, and this is just part of that. Now, going over to earnings expectations for Tesla. So they're still expected to grow pretty well, 345, which is going to be a little bit of a decline on a year-over-year basis, and part of that is not because of the lower earnings or higher expenses, but part of that is because of the price cuts. So revenue may not be as strong compared to last year, and as a result, margins, which they are coming down. Wall Street is expecting for EPS to also decline by about 15% on a year-over-year basis. Again, 2023 fiscal year ending in December. And that still puts us with a forward price earnings multiple of about 71, which again for Tesla is still really high. But then of course, they're expecting a very nice rebound in 2024, 43.5%, to all the way up to as much as $19 by 2032. So long-term consensus, long-term thesis is still valid. There is going to be some short-term volatility. That's what we've been experiencing all of 2022, 2023. And right now, I think the stock is still up over 100% on a year-to-date basis. So if you come over to Tesla here, so Tesla, let's take a quick look. So obviously last week we were up over 2.69%, but on the day definitely selling off quite aggressively, down over 5% on the back of these price cuts, and support level is going to stay put down to 242. Of course, if we end up breaking down below the support next week and come down to this green rectangle, again, it's going to be a shorter week, so volume is going to be a little bit lower. It's going to be easier for Wall Street to kind of manipulate on lower volume. So if you do see a breakdown below this level, next support is going to be inside this green rectangle, at which point I believe my covered call is going to be probably up like 60 to 70%, and I will be looking at taking some profits off the table from that as well. And we'll then switch over to maybe selling some puts on Tesla with my fair value, as you guys already know, sitting in the 150s and 170s as well. And again, I'm going to start to kind of ignore some of the comments because there's a couple of people that are still commenting on my videos talking about, not really having a full understanding of valuations and risk and reward and why fair values are so important. And oftentimes, I find people kind of boasting how they paid more for a stock, and it's never really a flex, right? I mean, to me, it's the real flex is savings. The real flex is getting a good deal, right? That to me is a much better flex than saying that, oh yeah, I bought Nvidia at $400 and now it's at $455, $485, $490, and I'm up all this much. Yeah, that's a little bit of a different sort of mindset that I think we need to come across at some point. And I think the only better way to learn it is by actually going through the experience and learning why fair values matter, why good deals matter, why buying undervalued, and of course, flexing with paying a lower price is a much better thing to do than, of course, overpaying for any stocks. That's why my fair value is in the 150s. If it comes down, great. If it doesn't, still happy to own a Tesla for the long term. And we'll continue to, of course, trade options along the way to generate some premiums and run that wheel strategy. So bottom line is we've got a big support area of demand. That's exactly where we bounced off of in the 200s, low 200s, with a resistance sitting all the way up to as much as 312, 310s. That's exactly why I sold the 325 covered call strike, because that is going to really bring us 28, 30% upside, and of course bring us up to that confluence of that resistance, which Tesla is going to have a hard time breaking out of, in my opinion, and a higher likelihood that it kind of gets rejected from those levels and starts to pull right back down. So hope you guys enjoyed this video and a quick update on Tesla. Still my biggest position, still holding a lot of shares, trading options on some of them. Will be dollar cost averaging at closer to 150s, and of course be selling puts at around those levels. But in the meantime, selling calls on the way up, selling puts on the way down. Support level is going to be inside this green rectangle, resistance all the way up to 300, 312, 315, around those levels. So I hope you guys enjoyed this video, found it helpful. Make sure that you drop a like. Don't forget to subscribe to the channel. Link to our Discord and Patreon is going to be down below if you're interested in joining. And of course, getting access to all the buy and sell alerts, options alerts, trade ideas, everything's going to be included. First week of the month is the best time to join, not to mention the fundamental and tech analysis courses and the options course 50 to 60% off, coupon code LABOR4. As always, happy investing. I'll see you all in the next video.